Hi, I'm Steve Bigger, Director of Equity Research at S&P Capital IQ. Welcome to this week's edition of Equity Analyst Forum. With me today on Equity Analyst Forum is Industrials Analyst Stu Scharf. Stu, welcome to the program.
Thank you.
So this week's focus stock of the week is Flowserve. Can you tell us a bit about what they do?
Yes, well, Flowserve, they make pumps, valves, seals for various companies in the energy infrastructure business. Could be oil and gas, or chemicals, general industries, and power. So they'll make the systems, the equipment for the flow of liquids within those systems.
So how about the earnings drivers for the company? What would you say is really driving that today?
Well, I think the main driver is their expansion globally in emerging markets. And we see a lot of growth coming also from North America for the larger projects as they start kicking in the second half of the year. But the quality in the backlog is improving, and that should help margins and earnings going forward.
How about their capital and their allocation strategy?
Well, they have a strong balance sheet with good cash flow generation, and their capital has been focused on share buybacks and increasing dividends. They, in March, increased their dividend 17%, and they're about to complete their $1 billion share buyback program, at which point they will resume their 40 to 50% payout to shareholders over a 2-year earnings period for the buybacks and dividends.
Okay. And how are you valuing this company? And then what kind of upside do you see in the stock price?
Well, I think the shares are trading slightly below peers, and I see upside of just about 20% now. And I think that based on the quality of their growth prospects and backlog and bookings coming through with the larger projects in the second half of the year, that bodes well for upside potential.
Okay. What about risks? What would you highlight there?
Well, there's the one risk has been currency exchange. In the first quarter, the Venezuelan bolivar impacted earnings based on the devaluation of that currency. And in the past, in 2012, the euro and some other currencies had an effect. But we see going forward it having a smaller impact on earnings.
Okay, great. Thanks, Stu.
Thank you.
And that's been this week's edition of Equity Analyst Forum. We'll see you again next week.